Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Monday after the close, after one of the biggest down weeks we've seen in 2 years. That's what every headline built what happened last week, which it was. The good thing, though, for technicians and for traders, felt like it was coming, right? We had some faulty action up where we couldn't break above 1985. We also were thinking that, between the Ukraine and Russia, and then Israel and Gaza, and the Ukraine, and I said the Ukraine, and Iraq, and Syria, and whatever, all those things go, boiling over, besides, some decent economic numbers where the Fed might have to do something, besides earnings season behind us, besides August, besides this, besides that, besides boom, besides bam, whatever. 1970 gave way, and then we sliced through 1950, which was the 50 days. So the question was, what type of move are we going to have the first 2 days of this week, considering we had a doji close on Friday, which gave us 2 points of reference to use, a low and a high to figure out what's next. You go to the chart of the spiders, and you will see this. You will see that here was the breakdown of the upper range, right? We broke, this was Fed day when things looked wishy-washy, when I put the water pistol at the head call that I think we see in 1925, that you could have, made some moves, and then you had the break below the 195.20. You had actually a little time to even sell that at the 50-day. Then we came in today saying, what is going to happen here? Here's your doji from Friday. That's what you had. That's all we knew. Just a doji. That's all we knew. Doji style on the market. And then you had a quick move, okay, above this, and then towards the end of the day, sold off a little. So the question is, do we continue to grind up to where the moving averages converge, where we broke down from, or, is today a trap where tomorrow we open down 15 handles and then we break below this? At this point, no one truly knows. All I know is that, I came in thinking this morning we can get some kind of oversold bounce, and I was going to look at some of the leaders to figure out if there was any relative strength. And, it wasn't easy, because the first move that went lower in the S&P, you also had some news that Israel wasn't going to enforce the truce, and then you had it felt as if they were going to test the lows, and then we wound up rallying. You go back to the chart, and you'll see it here. If you look at the 5-minute chart on the spiders, there was definitely some spots to maneuver. Okay, this was your first spot. Okay, unfortunately, I think kind of like myself, a lot of people were trying to be long right around here. I know. Let me get rid of the time plates here. They go to East Coast, so you can see it a little bit better. Okay, oops. Okay, here. Come on, sorry. So here was the open, okay? And right around here, I know I was thinking maybe we rally a little bit more. Let's go to the 5-minute. Okay, here you go. Now we can go. Sorry about that. Bear with the dog. It's Monday. I'm a little slow. Anyway, okay, so, no, here it is. There it is. Sorry. So this is today. This was, the quick move lower. And I'm like lost here. Anyway, it wound up breaking out when I left, to burn off some steam, because I was in from 6:30 this morning, and here was that clean trade right there that I wanted. Basically, I think it was right around here, whenever that was. Okay, so it needed more time. Needed to shake some people out, put a higher low, and then go. And then it trended all day. By the time I got back, we did get one trade right around here when it went sideways the whole afternoon, and we were able to get a tradable move through highs, which was nice. And that also went through the Friday high of 193.76. So we talked about 193.76 as the pivot, and I was trying to get above this pivot here, or the morning pivot, which was that 193.05, and it went through pretty clean, and then it continued. And then at the end of the day, a little bit of a pullback, no big deal. So anyway, this is where we are in the spiders, and we'll see what happens here. We'll see if it can continue to grind up and burn off the oversold condition, and then if the bears step in right here and turn it lower, then maybe we have new summer lows. Right at this point, who knows? It's a guess. The Qs did bounce back a little bit, still below this broken trend line. We'll see what happens tomorrow or the next few sessions. We have it above the 50-day. It also nudged above this and has some room if they want to push the envelope either way. Then you have the Russell, really not telling you much today except for it closed pretty strong. So the question is, can it reclaim the 200-day tomorrow or so, or get rejected? If it does reclaim the 200-day, still has resistance up here before the bears start worrying about a break of the downtrend like you had there, and which led to a bigger move. So this is just a day. We'll see what happens there. Banks, still nothing to write home about, just one day. And we'll see if it could test the lower end of this range. So a lot of these things just, today there was a bid to the market. Does it give you a false sense of security? Does it overshadow what happened last week? At this point, no one truly knows. All I know is if you went from portfolio approach to tactical approach around 1970 and then maybe got shorted 1950 when the market confirmed the break of the intermediate trend or got out of the way, you had some spots today to maneuver. You look at some of the names that we follow, Facebook. Actually, a decent day for Facebook. Was relatively strong first, okay, and this was one of the few stocks that took out the prior day high and closed above it. Not a great close, but still just fine. Okay, you had your doji, showed some strength early on. You could have added above 73.22, went as high as 73.88, and at some point maybe it clears this after some sideways work. Who knows? But some strength, decent day trade. If that's what you were looking to do. LinkedIn also held in there. I'm not sure what it did at the end of the day. Still looking strong from earnings. Even Yelp gave a day trade. I don't think there's much more to that, but green day there. You could see on the 5-minute, I guess, how it developed. It was upgraded and people didn't really believe it on the open. You had a quick move. It consolidated. Maybe the trade was right here. When the market got weaker, it got stronger. So from 67.50 to 68.50, all it was a day trade. I don't think you should get excited about this name. Groupon, unfortunately, I had the Wednesday into Thursday, one of my positions that I did not hold on to because I was like, it's a cheap stock. I don't want to own just a few positions that are very cheap. That doesn't look good for me, which who cares how it looks, I guess, because look at this percentage move here in Groupon today. Nice. When it poked its head up right around here, it's when I get interested. And if I just, cleaned up everything, and I shouldn't have cleaned up this one. But you had time to go back to this today. I didn't. Earnings are out tomorrow after the close. I think people were talking about 750 calls being active. We'll see what happens there. Twitter, at least they gave you a way out. Okay, I know it closed weak. Barron's had an article about their revenue and about their earnings, saying they don't believe in it, whatever. But the one thing I will say is, if you were trying to play it long, because it was kind of the right thing to do, big gap up, you'd figure some of it would hold. Didn't close great on Friday. At least you had a way out. You go to your 5-minute chart. It opened down with, the downgrade or just with the negative article, and it gave you a way out. So if you went home with Twitter thinking I need it, it's a strong stock, like going home with Facebook, maybe it continues. It gave you a way out and then started to fail. So at least it didn't open down here and trap you. When stocks open down and trap you, it's something you can't help. What happened on Thursday when the S&Ps were down 13 handles, they didn't go positive. You didn't get a way out of stocks. It opened down 13 handles, you had 10 minutes to breathe, and then it broke below it. So anyway, at least Twitter gave you a way out, and then it closed pretty weak. So not, to me, an active take-home unless, I don't know, maybe it gets upgraded or something. But at this point, technically on the chart, you go back to the daily chart, close near the lows, looks as if it could head a little bit lower. Apple also opened up green and went red. I do not have it long overnight, just because on a short-term level, it's not showing me something. I took it home on Friday long, thinking maybe, this was the pivot low. I did sell some up in the morning, and then when it went red, I got out of some and I wanted to see. And right now, it's kind of hovering on this trend line here. So hopefully it holds. If it holds, great. It could be back above this area sooner than later. If it breaks and closes below this pivot, it doesn't mean it's game over for Apple. It just might mean the market is a little weaker, technology might be getting weaker, and all of a sudden, at least it maybe might want to test a 50-day, which it was pre-market on Friday. So who knows? Right now, I'm just not in it. I'll wait and see. Tomorrow, if it gets above here, maybe I'll get back into it. Okay, then the market will give me more clarity. But right now, it's not showing me that there's relative strength, and it's one of the positions on a short-term active level I should be in. If you're in it long from here or long from here, and you're holding it up and you're trading options around it, you could do that too with the core. But as of now, as a day trade, this did not give you signals to take this home long. Tesla acted very well after earnings, another day. Didn't have explosive power, but the market really doesn't have explosive power. But I guess percentage-wise, it's up pretty nice. If it were to get above this, okay, all of a sudden that would tell you that the market's really that strong because they're letting a stock that has such a high valuation with a huge future go. Okay, and in a really weak market, they probably don't let that happen. Then your next level is all the way up here. I am a believer in Musk. I'm a believer in Tesla. I do think at some particular point, there's going to be a heck of a lot more of them on the road, and they're going to be a lot cheaper, and we shall see. Just, sometimes the market has an appetite for these type of names. Sometimes they don't, but, it's focusing and giving them, a free pass as of now. We'll see what happens, in the next week or so. If the market stays firm, this could be a new highs, but we'll see. What else? Banks. Let's just put Goldman Sachs for a second. Not much, but I guess if you sold here when it broke this upper level, you really didn't have a great entry today. It just gave an inside day. We'll see what happens if it could bounce up a little bit more for pressure clues. If it stays down here and can't go sideways or it can't get out of its way, maybe that means market's going lower. EWG, we were talking about it on the virtual trade floor. A bit of a reversal today. The DAX was down 0.5%. This was up, so it already stole 0.5% from overnight. It's very oversold. My gut tells me that the DAX is up tomorrow, and perhaps you get a move back to that would be actually that would be a sizable move back to fill this gap here. This gap gets filled at 29.10. So from here to there, it's a percentage. It's not a huge blockbuster trade. And then if the market really wants to work some of this oversold condition off, especially here in Germany, perhaps at some point it gets back to 29.40. So if you wanted to maybe take some, you can't now, the market's closed, but we were talking on the site, maybe September $29 calls, for some type of news that maybe the whole Europe, Russian sanction thing's not as bad as it seems on Germany. But at this point, all you know is that you've had some, there's definitely some cause for concern. Here is your way out, the gap up retest right there, or maybe even, when it broke the 200-day there or couldn't get back above it. So if you use those exits, maybe down here you try a reflex bounce, but sometimes being cute for a reflex bounce can hurt. And this has been the source of the weakness. FXI still acts awesome. Following the 8th day now, so keep staying with it if you're in it. As it follows the 8th day, maybe market bounces tomorrow, and then it hits above there. EWJ, Japan, wasn't ready to go. I apologize that I talked about it up here. It seemed as if maybe it was going to go with the FXI, but it's still holding here, holding the 50-day, looking okay. If you're in it as a swing trade, I still think it has possibilities. It's been consolidating well. It's just very sloppy, very, very sloppy. Has a big move back here. It's still digesting. So if you trade ETFs overnight, you just got to be prepared for a little bit of the slop fest. This was when it broke this downtrend, and now it's trying to hold higher. But again, in markets that are a little wishy-washy, not everything's going to be able to act so well. What else went on today? Microsoft. We were talking about Microsoft, and it finally had a bounce. So Microsoft, that's pulled in. This is another stock. If you look at it, what did it do? It traded and closed above a prior high, so maybe it can continue the bounce. Baidu was stronger earlier in the morning. And look at that. That too, was able to close above a prior high. So, oops. So really the moral of the story is, recently, like this morning, what we did is when I came in, I said, what could rally if the market wants to have a bid? Stocks that had good earnings, that have been acting well, that have pulled in but holding a portion of the gap. Around 11:30, I posted a chart just showing the inside range of the S&P, saying if I had real big conviction that this could be a good model portfolio, okay, I put Baidu, which was showing relative strength and could have been just a good trade, not even a swing if you didn't want it. Facebook I listed, which also wound up going. Win, it responded well to its earnings, and look what it did today. Okay, so showed you that it could have been bought. I was trying it around 211, and unfortunately I just was too short term. But now at some point, this could perhaps get above this 220. Look at this is when this is when I was buying it right in here, and then the market came in. I said, I'm done with it. And then later, when I was done with it, then it said I want to be better, and it wound up being a lot better. So just because it didn't go when I wanted it to go here doesn't mean it couldn't go later. But I was already in my spin class, but whatever. But that's what I choose to do. I choose to leave my desk around 11:45, 12 because I start on the desk at 6:30 and I would be luggage if I stayed there all day and nobody would want to talk to me. So I'll miss a few trades during lunchtime where I'll hold some with stops and let the market work its way out. And then when I get back at 2:15, 2:30, hopefully things I was looking at didn't go and things that are still percolating, like the spider trade is still there for additional cash flow. And I think over the long term, over my career, not being on my desk from that 11:45 to 1:30 is going to hopefully keep me looking a little young, which I feel a little old, and keep my head on straight so I could communicate with all of you, have a straight face, and be consistent, which is what I like to do. I don't swing for the fences, and I don't have to be in everything. I just try and be in some good setups that do make sense. And when the market goes without me, I feel a little upset. And today it went without me because I was thinking it should have done it in the first hour, and the market doesn't want to do what I wanted to do, or it doesn't have to do what I wanted to do, one of those things. It's Monday. It already feels like a long day. We'll see what happens in the next few sessions. I do not think the market's out of the woods, but there are definitely some trades that could happen intraday, and there are definitely some signs of stocks showing relative strength that when the market does want to go, these will hopefully be the names you can go with. And if you do have the risk, have a tier 1, trade a tier 2, keep the tier 1 just in case that was it last week. And then this way you're not missing out on a move that could take place if you're trying to be too risk averse. Have a great night. See you tomorrow.